Okay, peeps, welcome back. So today we're going to be going over how you can make $1,000 a week with QDTE. Let's get it. Okay, so first things first, what is QDTE? Well, for those of you guys that don't know what QDTE is, it comes from Roundhill, as you guys can see here. So I'll pop over here to the website. Basically, it says right here QDTE utilizes a synthetic covered call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the NASDAQ 100. As you guys know, the NASDAQ 100 is the most volatile stock index. Okay, there's four of them: S&P 500, NASDAQ 100, Russell 2000, and the Dow Jones 30. I mean, there is actually more than four, but those are kind of the main four that always get talked about in the markets. So NASDAQ is the most volatile, which implies the most volatility, which means you're probably going to get paid the most in options premiums from this one. So that's why we're talking about it. So that's essentially what QDTE is. I cannot talk today. So as you guys can see here, 0DTE means 0 days to expiration. That's what that means. Covered call means that you have to have 100 shares of whatever it is. So in this case, the triple Qs, you have to have 100 shares of that before you can actually write a covered call. And then they do 0 days to expiration on that strategy. So you guys can see that we do actually own some shares here. So 36 shares. I do want to point out on Robinhood, you cannot do you currently cannot do a fractional share order because I think they reserve this actually for something for funds that have large levels of liquidity. This thing, as you guys can see, is very small. So it's only 24 million. That's really, really small for any kind of ETF. So it's not really that much. Something like FEPI would probably have, I believe they do actually have dollar amounts that you can buy or fractional orders. But as of right now, you basically have to buy whole shares. So just want to show you guys here so you can see for yourself what a 0DTE actually looks like. So just got to give it a second. So these are the Qs. As you guys can see, it's very expensive. So if you wanted to do a cover call on this, a 0DTE for yourself, you would need to have basically every share is $454. So you times that by 100 because you can only sell cover calls in lots of 100. Again, that would be $45,400 per contract. It is very expensive. Okay. There is other option strategies that you can use to actually fork over less money in terms of investment, but for the cover call is extremely expensive. So you guys can see here that under the tab, so you have 0 days, 1 day, 2 days, 5 days. So they give you multiple options here. You could essentially do cover calls every single day of the week if you wanted to. But yeah, I can't actually show you guys the premiums right now because the markets are closed, but this pretty much just gives you an idea of what it looks like underneath the surface. So going over the website here, you can kind of see all the different facts. So 30% yield as of right now, that's pretty good. They give you like a little description of what the fund is right here. This is the first ETF, well, this one in XDTE, which is the S&P version that I've ever known about that pays weekly. I heard SoFi also does them, but a couple of things to point out here. I'm pretty confident that this one pays significantly more, and the price stability is pretty good on this one. So again, assets under management, 24 million. Expense ratio is a little high, but again, you get what you pay for. If you want to get paid weekly at a 30% yield, I mean, think about it. You're getting paid 30% per year, and you're paying these guys 1% of that 30%. I mean, is it worth it? I don't know. That's something you got to ask yourself. So traditionally, 0.95% is really high, but again, I mean, you're getting paid 30% yield for these guys to basically write options on your behalf. They're working on your behalf to provide passive income for you. Options is actively managed. I can tell you guys that right now as we do it ourselves. So you can see weekly payments here. So every single week, declaration and X dates. The payouts fluctuate a little bit. So 31 cents on the first week, 37 cents, or about 37.5 cents the last 2 weeks have been pretty consistent. Again, the markets have not done much. They've been mostly sideways, which explains why the yield is still the same. So I do also want to point out they have a sister or brother fund here, so XDTE, which again is the S&P version. It does pay slightly less because again, the S&P 500 is less volatile than the Nasdaq. So one other thing I want to show you guys real quick before we get into the numbers here is the overall price action history of the fund. So give me a second and I'll pull this up on Robinhood. I could pull this up on TradingView, but it's essentially going to show us the same things. So, whoops. Yeah, that's actually our portfolio balance. My bad. I'm tripping. So, okay, QDTE. So we'll go over here to the max time frame, and you guys can see that this thing started out as listed on March 7th. Okay, this thing is only a couple months old, so it's still relatively new. We do understand that there is risk with this, even though the price is stable. You guys can see it did kind of dump here during the pullback we had in the market. So opening price 46.02, current price 44.74, so down a little bit, 1.28 or 2.78%, again 3%. But again, the dividends that you get paid from this are offsetting the pullback in the price, okay? So again, it comes down to total return. And as far as I'm concerned, if this thing has only pulled back 3% in its choppy market over the last couple of months, and the dividend payment, on a per month basis as of right now is 80 cents a share, I would say that's pretty good. Again, we have not seen a QE bull market. When we do, ideally, this thing goes up in price. As you guys can see, once it hit this bottom here and then the market's rebounded, this thing absolutely ripped. I mean, it went from basically 42.15 all the way up to $45. So something to keep in mind. Again, we've had this fund for quite some time, and we are still slightly in the positive as of right now. We only have 36 shares, so that's something to keep in mind. One other thing I want to point out about these high yielding funds is if there is a bear market, these things will likely go down in price, okay? The nature of a covered call is that there's limited upside and there's all of the downside, okay? I want you guys to be aware of this. Understand there are risks. Do your research. Understand what you're getting into here, okay? So let's get into the numbers. All right, so I'm on dividend calculator, marketbeat.com, as you guys can see. So 0DTE, I don't know why it says 0DTE. This is supposed to be QDTE, but I put in QDTE. So we have individual stock, monthly frequency. We do want a drip. Number of shares, 22. Again, that's basically $1,000 divided by the current share price. But because we can't do fractionals on Robinhood, we just put 22 shares instead of 23. So that's why it looks like that. Share price, annual contribution will start out with $500 a month. Dividend tax rate, which I'm pretty sure might be slightly higher than that. But then again, if Trump gets elected, it could be lower because we all know that Trump loves to do tax cuts. So it's good for business. So annual dividend yield here, 30.77%, as shown on the website. 0% in dividend annual increase, annual share price increase 0%. Again, I'm not really expecting these things to go up massively in value. They could, but this is kind of more like a sideways and maybe slightly up kind of play. 10 years invested. So we'll go over the numbers here. As you guys can see, so we're looking to make $1,000 a week, right? So it's basically about $52,000 a year. So in between year 9 and year 10, you'll get to that roughly around $1,000 a week, or $1,000 a week of passive income here. I do want to point out that it's probably actually going to go faster than this, but the reason why it shows this at this particular rate is because, again, we cannot, this calculator doesn't allow weekly compounding, okay? So the dividend snowball is going to compound on a weekly basis, assuming you put in $500 a month into this fund, okay? But it's showing this on monthly, so it probably will actually be faster than this. With the weekly compounding, maybe like, honestly, I don't know, maybe like a little bit faster, so somewhere around the 9-year mark, maybe a little less than 9 years. It's hard to say exactly, but because this is weekly, not monthly, it is likely going to compound much, much faster. So let's take a look at a different number here. Annual contribution, about $1,000 a month. If you wanted to get to $1,000 a week, this would put you almost exactly at $1,000 a week. Again, with dividends, you don't typically typically it's not, because it's not exactly a paycheck, you don't get paid 13 times a year. Again, the 52 weeks, right? It would be 12 times, basically 12 times a year. But then again, I guess if it is every week, maybe it is 13 times a year. I don't know. So anyways, 52,000, that's the number we're looking at. So again, you guys can see $1,000 per month would land you somewhere between 7 to 8 years. So again, it's really not that far off in the future. Dividend growth investors usually plan on like 30, 40 years into the future. I don't know anybody personally that wants to wait that long to retire. What is the point of building up all of that income over time just to not be able to enjoy it because you're too old to enjoy it? And I'm not knocking people that do that. I have a lot of respect for that level of discipline. I'm just saying there's some of us out there that don't want to wait that long. So $2,000 a month investment, you guys can see it significantly shorten the time frame here. So you'd be looking at somewhere between 5 to 6 years. I mean, that's pretty good. The after direct value you can see here is pretty substantial. And it's hard to say exactly if these are going to be the numbers or not, but time will tell. So we'll just bump it up one more time and we'll say instead of 2K a month, it's 3K a month, assuming you can afford this. Everybody's situation is unique. I understand that. So 1,000 a week, again, 52,000 a year. You guys can see at this rate, it would be roughly between 4 to 5 years. And I mean, in all honesty, even once you got to 4 a year, you could technically slow down a little bit because the snowball is kind of it's gonna grow itself much faster at this point. Because I mean, even right here, you're pulling in like $800 a week every single week, $900 a week. You wouldn't necessarily need to put as much in because it's starting to kind of snowball itself at that point. So, anyways, this is how you can make $1,000 a week with the QDTE weekly paying dividend ETF. Hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.